Hi everyone. Welcome to the Open Dairy Market Update. As you may have noticed, we changed the timing of our market update to Monday afternoon. In that way, we can look back on the past week and also give you a feeling about what we expect for the week ahead. Last week, we have seen some interesting moves in the dairy market. In general, it seems the sentiment turned a bit firmer due to cold and wet weather in Europe, resulting in a delayed milk flush. We also believe that the market is not in agreement regarding the upcoming GDT result. Probably, the week will start quiet and GDT will set a new sentiment. One thing we notice in Europe is the large contango in the futures market. Looking at the bids and offers, the premiums for Q3 and Q4 are way above the cost of carry. That means it's beneficial to buy fresh product on the spot market, finance, and store it and sell futures against these purchases. This goes for butter, but especially for SMP. We explained this mechanism in our market update of the 3rd of March. This strong forward curve keeps spot prices for butter and SMP from falling further. Also, cheese provides the best valorization, which could keep away some milk from the drying towers short term. We already notice pressure on whey and whey derivatives markets as a result. The situation in the US is slightly different with supply pressure and a flatter forward curve. The CME price for non-fat dropped to 111, retraced to 116 and dropped to 114 again. The EU and the US will be competing on the world market, especially on the protein side. So what about demand? This is still the big question mark. The demand from Algeria remains strong, but we have seen very limited activity in especially Southeast Asia during the last GDT. China was slightly better, but we wonder about the new normal of buying behavior for this market. Last week we noticed that buyers stepped on the brakes when producers tried to increase prices, telling us that the spot demand is quite limited. We do see buying interest for Q3 and Q4 for fat and protein, anticipating on supply contraction in the Northern Hemisphere. But producers don't want to offer forward, which is probably why buyers turn to the futures market, resulting in the before-mentioned steep premiums. For now, we see prices move range-bound and we don't expect large surprises in the upcoming GDT. Once we have more clarity on the flush development in the EU and the US, the cards might be shuffled differently again and volatility will return. Thank you for attention, and we welcome your remarks.